The long and winding election road. But has it led us home or to the courthouse? This is Bloomberg Wall Street Week. I'm David Westin. This week, contributors Larry Summers of Harvard and Glenn Hubbard of Columbia. Sam Zell of Equity Partners.
I would expect that a Biden administration would be more pro-regulation.
Sharmin Mossavar-Rahmani of Goldman Sachs. Beth Akers of the Manhattan Institute. Rebecca Green of William & Mary.
None of that will matter if the vote totals don't show that the disputed ballots would impact the outcome.
And Rick Rieder of BlackRock.
Markets can only do one thing at a time. It's like, just tell me I need to focus on the election, and then I'll focus on COVID. They can only do one thing at a time, which is the most remarkable thing.
If the 2020 presidential campaign seemed to last forever, well, that's because it very nearly did. Starting over 3 years and 9 months ago, when President Trump announced his candidacy for re-election in Melbourne, Florida. And before all was said and done, 325 Democrats and 164 Republicans officially filed to run. In the end, it came down to just two: President Trump.
If you count the legal votes, I easily win.
And former Vice President Biden.
I'm here to tell you tonight, we believe we're on track to win this election.
And what an election it was, with over 100 million Americans voting before Election Day, and a projected 2/3 of those eligible turning out to vote. That's the highest since 1900, back when we inflated those numbers by leaving out the half of the country that was female. It wasn't just the enthusiasm that marked the election. It was the split right down the middle and right through the country. A split that extended to our government, as we apparently ended up with a Democratic president and what looks like a Republican Senate, with a House that is still led by Democrats, but by a smaller margin than what came before. And if that weren't enough, President Trump has vowed to take his fight for re-election past the polling places to the courts, to the Supreme Court, if necessary.
This is a very big moment. This is a major fraud in our nation. We want the law to be used in a proper manner. So we'll be going to the U.S. Supreme Court. We want all voting to stop.
Leaving us all to wonder what comes next, with an economy trying its best to recover, but still leaving over 10 million people out of work. And with a coronavirus that doesn't know the difference between Republicans and Democrats, and that gets its own sort of vote in our collective future. To help us start to make some sense of it all, we welcome now the man who advised President George W. Bush on the economy, Glenn Hubbard. He served as the chairman of the Council of Economic Advisors under President George W. Bush. He went on to be dean at the Columbia Business School and is now professor of finance and economics there. Thank you so much. It's great to have you as a contributor to this program. So, Glenn, give us a sense. In addition, by the way, to the election, we also had some jobs numbers that come out at the end of the week, and they were quite heartening, although there are still 10 million, over 10 million Americans who don't have a job who did before the pandemic. Give us your sense of the economy right now, and what does it need going forward, no matter who the president is?
Well, David, the jobs numbers do indicate a bounce back, particularly in private sector employment, which was higher. As you know, there was a government retraction, but we've got a long way to go. We have not bounced back anywhere close, as you said, to a 10 million jobs short. And economists view, I think, that the level of output won't recover till well into, if not late next year, relative to what it was this past February. So we've got a long way to go. What the economy needs at the moment, obviously, is first and foremost getting the virus under control. That's prophylactic practices in the near term. It's a vaccine in the medium run. But we also need a more fiscal support. I was heartened to see that there's a discussion of a package that could include things like aid to states, beefing up unemployment insurance compensation, and I would hope some assistance for small and mid-sized businesses as well. That's, I think, what we need in the midterm.
So I think just about everybody at this point agrees we need to get some more stimulus here, fiscal stimulus. We heard, in addition, from Jay Powell, the chairman of the Fed, saying just that this week. Give us a sense, with the election where it is right now, not fully resolved, but it looks like we know where it's going. Is that going to make that stimulus more likely or less likely? And I guess, as important, when?
Well, I think there's every reason to believe it could be relatively quick if more modest. So, for example, a few months ago, several colleagues and I had suggested another $1 trillion would be on order. That seems to be a number that the two sides are talking about. That's well under the numbers that were talked about just before the election. But that would give a good start, and it would give a chance to come back to it. So I'm optimistic that the Biden transition team, if that's what happens, and Leader McConnell, if that's what happens, can try to work things out.
So, as you say, if that's what happens, let's assume for the moment that we do have a President Biden taking office January 20th. He had a lot of, I can say, robust programs of dealing with the economy and some taxes to go along with it. At the same time, if he cannot get a commanding lead in the Senate, it's not clear he can do that. So how much of what he ran on can he implement as president if he is, in fact, in the Oval Office?
Well, some will depend on rules. On the tax side, if he has a majority of the Senate, he could use what's called reconciliation and do some tax bills that could last for 10 years. It won't accomplish his spending objectives. I think a more reasonable outlook might be delaying large tax increases. We are, after all, in the middle of an incipient recovery, and focusing first on a recovery package, and then what I would think of as a renewal package, actually helping many working Americans with training, with income support, and trying to get the country going again. I think that would get more bipartisan support. That could be physical, like infrastructure, but more to the point, it's like education or training, say a bolstering of community colleges and really focusing on working men and women. I think that has bipartisan appeal.
Right now, Glenn, I think it looks like the president's going to have to govern from the middle. No matter what. The one thing that seems clear from this election is the people basically got together and said, we don't like the far right, we don't like the far left, we'd like something in between. Where could there be common cause? You mentioned infrastructure. Is that a source of common agreement, perhaps, between the parties? Are there others?
Well, I think infrastructure could be common agreement. It would be a stretch to say that it is so at the moment. But I think focusing on problems facing working class Americans, which go the gamut from training to support for low-wage work, to aid to some places in the country that have been left behind in the shifts toward technological change and globalization. These are all things that we can do, and they don't, to me, have a Democrat or Republican feel to it. They're good economics. They should also be good politics, given what we're seeing in the polls surrounding the race. So I would hope that's governing from the middle. Trying to do more extreme programs on either the right or the left don't seem like they would have the political support.
Glenn, one thing that has no partisan orientation that I'm aware of is COVID-19. It is a non-discriminatory afflictor, in effect. Is there something we can do economically to address COVID-19? That is, do we need more money for testing, for tracing, things like that? Certainly that COVID-19 is affecting our economy.
We do. I mean, the quickest way we can get the economy better is obviously to get the virus under control. Now, part of that waits for a vaccine, but we do have the need for public support for the public health care system, for example. We need more funds for testing and tracing. This has been around for some time. A number of proposals are out there to do that. And I would hope that whatever package a president or president-elect could agree on with the Congress would involve that.
So, Glenn, in addition to the election, in addition to the jobs numbers, we also had the Federal Reserve meeting and deciding, and Jay Powell giving a news conference this week. The Federal Reserve has been front and center for the economy for some time now, necessarily so. As we look forward to the next 4 years, can we expect that perhaps the Fed is not quite so central because essentially maybe the Fed's done what it can do?
Well, I think the Fed will still be central. The conduct of monetary policy is important, and the Fed has said that it would keep its low interest rate environment for a while. But I continue to believe that we've asked way too much of the Fed. And I share Chair Powell's view that we should be asking the Congress for more fiscal support. It's not just that monetary policy isn't the best medicine, and it's not. The fiscal support would be better. It's that it also runs the risk of overinflating asset prices. It runs the risk of fanning income inequality and wealth inequality. So I think we ought to let the Fed fix crises when they occur, let the Fed conduct a reasonable monetary policy, but not count on it to always be the economy's savior.
Glenn, you're an economist. I'm not asking you to be a political analyst. At the same time, some people say that there are places, such as Europe, for example, where it appears that fiscal and monetary policy are more coordinated. UK as well, that seems to be true. We saw that this week. Is there some hope in this new world that we can coordinate better? Because we've had at least 3 different sources now. We've had the Treasury with Secretary Mnuchin and President Trump. We've had Nancy Pelosi, Speaker of the House. And then we've had Mitch McConnell and the Republicans in the Senate. It seems like we had at least 3 different players here.
Well, the advantage of our kind of democracy is sometimes that tension is worthwhile. I think there will be more coordination of fiscal and monetary policy in the sense that some of the Fed's newer programs do involve credit risk and Treasury involvement. So in a sense, that is going on. So I think the identity of whoever the new Treasury Secretary is to work with Chair Powell is going to be an extremely important one for markets and the economy.
Okay, it's always a delight to have you with us. That is Professor Glenn Hubbard of the Columbia Business School, a Wall Street Week contributor. Coming up, the markets did an about-face on those expectations for reflation going into the election. But have they got it right? We asked Sharmin Mossavar-Rahmani of Goldman Sachs and Beth Akers of the Manhattan Institute. That's next on Wall Street Week on Bloomberg. This is Wall Street Week. I'm David Westin. Leading up to the election, markets seem to be getting ready for a Democratic victory across the board that would bring more spending, more borrowing, and more inflation. But by election night, they were having some second thoughts. Now it looks like we may have a divided government. How much change in direction are they likely to have? For their perspectives, we welcome now Sharmin Mossavar-Rahmani. She's Chief Investment Officer for Wealth Management at Goldman Sachs, and Beth Akers, Senior Fellow at the Manhattan Institute. So welcome to both of you. Sharmin, great to have you back with us. So start with that question. How did the markets react? Because I'm going to say election night itself, there were violent reactions, including in the 30-year for the Treasuries and equities futures, and then they settled down. Actually, the equities kind of liked it overall over the course of the week.
We think that there are 2 drivers that have driven the market this week. One, election-related. The mere fact that we don't have uncertainty anymore, that the election actually occurred and the process was generally smooth, was important. Second, I think in terms of the fact that you have mentioned this as well, that it was 50-50 split, very close everywhere. So there's a strong signal that policymakers should not go too far to the left or too far to the right, that the markets won't like that, and the electorate, with such incredible participation, confirms that they don't want extreme policies, and most importantly, divided government. If we go back to 1928, or we just look at the post-World War II period, returns, both for equities and bonds, during periods of divided government are close to double that of single-party government. So the markets, the financial markets, do not also like extreme policies. So that's a perspective in terms of looking at the election results. And then from a fundamental perspective, we've had 83% of U.S. Stocks at the S&P 500 reporting earnings exceeding expectations, both on revenues and on earnings. So very solid fundamentals. We had the third quarter GDP number at 33+%. So very strong momentum going into the fourth quarter, helping offset some of the risks that we're going to have with the surge in infections. So that's very important. And then in addition, we just had the non-farm payroll numbers and claims yesterday. So very good support there, and incredible decline in the unemployment rate with an increase in participation. So very good generally.
So Beth, you follow labor economics in particular. In addition to the election this week and the Federal Reserve, we also had some jobs numbers that were pretty encouraging, actually, better than had been expected. How much help does the labor market really need from either the Congress or the administration at this point?
I'd say as much as it can get. I saw a lot of people starting to celebrate the good report that we had today, and were quickly mobbed by economists who wanted to remind them that while this was good news today, we are not in a good labor market. So as Professor Hubbard pointed out in the earlier segment, we lost 20 million jobs at the onset of the pandemic, and then we have begun to crawl out of that hole. We've gotten about halfway out. 10 million more jobs is a long way to go. And it's especially a long way to go when you realize that a lot of the people who have come back into employment at the early stages of I guess what we could call a recovery, are people who return to the same job that they were temporarily laid off from. A lot of the people that we're seeing who remain unemployed today were completely separated from a job. And so, as you can imagine, it's going to be harder to get this population back to work. So I think a lot of support is needed, and I'm advocating for legislation myself.
So we may need a lot of support on the labor market, but Sharmin, do we need a lot of support for the other markets? Because as a practical matter, it looks like if we don't have too many taxes, it's not too disruptive, it's sort of Goldilocks, sort of just right in the middle, particularly when you have low interest rates, it makes equities worth a lot.
I think there's no doubt that we need some support as we get through the continued acute phase of the pandemic. And we know with the surge that we've seen in numbers, not just in the US, but in other parts of the world, we're going to have a very difficult November and December in terms of infections and what that means for the economy. If you look at high frequency data, whether you're looking at Google mobility data, Apple mobility data, TSA travel, open table data, you are seeing a flattening of that improvement. So the next several months will be tough. But the assumption is that if we get a vaccine and these therapeutics sometime in the first quarter of the year that have some level of efficacy, no doubt that none of these are going to be magic bullets. But if you have something that's going to help, then you'll need some support, but gradually the unemployment rate will improve. If you think of our forecast for 7% by the end of the year, we already got it. So the glass is more than half full than it is empty.
So Beth, briefly here, I'll give you the last word. Is it going to be even rougher in the labor market? Because we didn't bring all those 10 million people back, and if in fact we have to shut down some more, it's going to be worse.
Well, the good news is that we had a good bump this month, which sets us at a higher level for any potential deterioration in the coming months as the pandemic potentially gets worse. I would say we're in for a long winter, both with the pandemic and the labor market, quite unfortunately.
Yeah, exactly. So we have a lot to look forward to. We hope it's better than we expect. Many thanks now to Sharmin Mossavar-Rahmani of Goldman Sachs and Beth Akers of the Manhattan Institute for giving us a rundown on the job market as well as what's going on with equities and debt and in general what is confronting the next president of the United States, who's expected to be Joe Biden, although at this point it's not absolutely certain, particularly with the president of the United States saying he's going to take it all the way to the Supreme Court of the United States. An eventful 4 years ahead of us without a doubt. Coming up, former Vice President Biden may think he's the next president of the United States. News organizations may agree, but President Trump isn't so sure. What are the possible legal hurdles to making the unofficial official? We talk with law professor Rebecca Green of William and Mary.
As with all of these cases, what's really going to matter is whether or not an outcome-determinative number of votes are at issue.
This is Wall Street Week on Bloomberg. This is Wall Street Week. I'm David Westin. President Trump told us election night that he was on his way to the Supreme Court to make sure he won the election. And he started that process, filing lawsuits in Michigan and Pennsylvania and Nevada and in Georgia. But it's not enough to sue, you have to win. And we turn to election law expert Rebecca Green of William and Mary to take us through the president's legal case and his chances.
Different states have different laws, but it allows somebody, either party representatives or even just members of the public, to observe the counting process. And that's, of course, to ensure that the public can, oversee what's going on and make sure that, you satisfy themselves that there's nothing wrong with how the votes are being counted. And so I think it's entirely appropriate for members of both parties to press for, the ability to observe meaningfully. And, I'm glad to see it when courts assist campaigns in ensuring that those transparency laws are followed. I think it's a win for everyone because, the more transparent the process, the more people will have confidence in the outcome.
So we have the transparency claims. We want our observers in there to make sure there are no shenanigans, fraud or otherwise going on in Michigan and Pennsylvania and things. There's also the question of, one could call them late ballots. That is to say, absentee ballots that are postmarked by Election Day, but that arrive later. You have that issue in Pennsylvania and in North Carolina, which has been litigated some already. Take us through that litigation.
Yeah, so the question is, whether or not in Pennsylvania, for example, the state Supreme Court could authorize the state to accept ballots that were postmarked by Election Day, but returned by the Friday after Election Day to the election officials. And the question there is whether or not the state Supreme Court has the authority under the Constitution to make that kind of change. The GOP alleging that only the state legislature can do that. And so that could certainly play out. That's something that the Supreme Court has indicated it's thinking about, even though it denied the stay for the Pennsylvania Supreme Court's decision. But again, I think as with all of these cases, what's really going to matter is whether or not an outcome determinative number of votes are at issue.
So, Professor, this is, I think, a terribly important point that you make. I want to emphasize the determinative number of votes, because even if there is a case that it has some merit to it in the Pennsylvania situation, as you say, there have been a couple of justices who said, I think that's worth taking a look at. It doesn't really count unless the number of votes that came in after the election but were postponed before were enough to make a difference in Pennsylvania, and Pennsylvania is key. That's potentially different from 2000 and Bush versus Gore, where we all knew what was going on down there in South Florida would determine the election.
That's correct. I mean, I think, all of these lawsuits that are being filed, whether or not they have merit, whether or not, election officials have failed to follow the law, as some of them are alleging in terms of the counting process, none of that will matter if the vote totals don't show that the disputed ballots would impact the outcome. So we can't really know what litigation, matters until we know, until the counts are certified.
That was law professor Rebecca Green of William & Mary. Time for a Global Markets Week in Review.
David, the U.S. elections were closely watched in Asia, with stocks rising to 2018 highs amid thin volumes as investors weighed the implications of a divided government in D.C. And what was meant to be the world's biggest IPO ever hit a surprising roadblock this week. On Tuesday, China's regulators suspended Ant's listing in Shanghai and Hong Kong 2 days before Alibaba's crown jewel was to raise $35 billion. And next week, Asia's tech giants stay in the hot seat, with Tencent and SoftBank set to report earnings. Plus, ByteDance faces a November 12th deadline to sell a stake in TikTok. Danny?
Thanks, Sophie. Europe this week has really been concentrated on the U.S. election. Even the German foreign minister saying that he thinks all U.S. votes need to be counted, being quite vocal about that. But beyond the election, it really is all about coronavirus, with rising case counts and Greece being the latest country to undergo a lockdown. Here in the UK, we saw both monetary and fiscal stimulus get injected into the system this week as it copes with the fallout from its lockdown. Next week, we get a second print on the euro area GDP, and traders will be looking out for any signs that the area is headed in to a double-dip recession. Scarlett?
Thanks, Danny. When results from the U.S. elections came rolling in, we saw a big repricing in stocks and bonds. Bets on a divided government have replaced a Democratic sweep scenario. Meantime, the U.S. dollar tumbled as the Federal Reserve made clear that it's ready to provide more stimulus as needed. Now, Sophie mentioned the upcoming TikTok sale deadline. We also await earnings from the biggest U.S. home builder and media company. It'll be a study in contrasts. D.R. Horton may report the fastest sales growth in 2 years, thanks to demand for suburban homes and record low mortgage rates, while Disney is set for another tough quarter with limited attendance to many of its theme parks and ESPN in cost-cutting mode. David?
Thanks to Sophie, Danny, and Scarlett. Coming up, how badly is the pandemic hitting the real estate industry? And what is the long-term damage likely to be? We ask Sam Zell, founder and chairman of Equity Group Investments.
We've seen, particularly in New York and San Francisco, significant reduction in demand.
This is Wall Street Week on Bloomberg. Recurring waves of the pandemic and the potential for gridlock in Washington could complicate the road ahead for real estate. Over the past 3 years, the real estate industry reaped the benefits of President Trump's Tax Cuts and Jobs Act. But stimulus measures that supported businesses are now fading, with ripple effects on real estate.
Yes, the presidency is important, but we think that the Senate is even more important. That's where fiscal stimulus comes into play. That's where taxes come into play. play.
As the pandemic drags on and restrictions on activity come back, brick and mortar retailers are going under as customers shift to online shopping.
Every single retailer that starts online, when they get to a certain scale, they want to build out stores. It's the cheapest way to attract customers. Maybe not in the last 6 months, but eventually this will all sort itself out.
And malls may be hit particularly hard as they follow their retail tenants into bankruptcy protection. Earlier this week, Pennsylvania REIT and CBL Associates Properties both sought protection from creditors. Office buildings are also in limbo. In New York, offices are still largely empty as residents flee the city for the suburbs. According to a Street Easy report, the median asking rent for Manhattan apartments fell below $3,000 a month for the first time since 2011.
I think we're in a period of a little sort of near-term and mid-term dislocation in that a lot of folks are moving outside the city for the time being, but will come back.
Some investors are seeing opportunities in the shift away from big cities.
While there are pockets of real estate that we think are going to do well, there are pockets that are more challenged. We are now involved in rental housing, single-family rentals, which we think will do quite well.
When it comes to finding opportunities, whether in real estate or elsewhere, there aren't many with the track record of Sam Zell, founder and chairman of Equity Group Investors. So we asked him where he saw the opportunities today.
You've seen a tremendous increase in the interest in suburban locations. You've seen, we're probably, among the largest central business district owners of residential in the country. And we've seen, particularly in New York and San Francisco, significant reduction in demand. In New York, it's more a question of price. So as prices have come down, demand has increased. In San Francisco, you have an environment that's more difficult, and I think that's in effect putting people who previously fought for a place to live in San Francisco being able to work from a more remote location. Perhaps you could argue that this has certainly done a lot to increase the pace of conversion to e-tail and retail on the net. And I think it's fair to say that probably January 1, 21 in 2021 is probably going to be equal to where we thought we were going to be in 2025. So the lockdown and the pandemic has certainly accelerated the movement, an increase in retail online. There's a lot of discussion today about change in office activity going forward, and higher percentage of offices operating remotely. I'm pretty skeptical of that. I tend to believe that we're social animals and that we perform best when we're stimulated by other human beings. I think that you can be remote in nowhere, Iowa, but at 5 o'clock there's no place to go, as opposed to living in New York or Chicago or San Francisco.
As an investor, as you look at this, where are the challenges? Where are the opportunities? Because you always find the opportunities.
Well, I'm not sure I know the answer quite yet as to what the opportunities are. I think the result, frankly, for the country to basically come out, quote unquote, even, as opposed to a wave going the other way, is kind of a reflection of how lucky we somehow are always turn out to be.
Are you concerned about deregulation? Are you concerned about further tax cuts?
Well, I think that, the Obama administration was probably the most regulated administration that we've ever had. I think that the first 4 years of Trump probably brought a lot of those regulations back to, let's say, equilibrium. I would expect that a Biden administration would be more pro-regulation, but perhaps less so than what occurred during the Obama years.
That was Sam Zell, founder and chairman of Equity Group Investments. Coming up, we didn't get that big blue wave, so what would a divided government mean for economic policy at home and abroad? We asked special contributor Larry Summers. This is Wall Street Week on Bloomberg. This is Wall Street Week. I'm David Westin. We stand at the threshold of change. A new Congress, a new presidency, a new chance to get things right. But if Joe Biden is to be our next president, he may have to do it with a divided government, which could limit how far and how fast he can move, but may also ensure that he brings all the rest of us along with him. So we turn to the man who has advised presidents at the highest level, our own special contributor, Larry Summers of Harvard, and ask him what a President Biden could still hope to accomplish even if he has a majority of Republicans in the Senate.
Means it's going to be more difficult to do the boldly ambitious on the Democratic side, and it means it's going to put pressure towards doing centrist things. What is that? It probably means a lot of emphasis on COVID and getting the money that's necessarily appropriated to do the testing, to do the contact tracing. But it may be that Joe Biden will be fortunate in his timing, in the sense that there'll be tailwinds of a variety of kinds reducing COVID that will begin sometime near when his presidency begins. The other opportunities are, in the very short run, to maintain income. It is insane to have the biggest fiscal contraction in the country's history at a moment like this, and that's where we're going to be if we don't pass a new economic support bill. I am hopeful that the country can come together on infrastructure initiatives. I think you're probably going to have to include some traditional progressive priorities and some traditional conservative priorities. On the progressive side, more investment, some of that investment directed at protecting the environment, strengthening urban areas. On the conservative side, more efficient procurement, more rapid siting consistent with environmental obligations, more role for the private sector. I'm hopeful that a synthesis can be created. I hope that in the near term, the pressure that will come from two runoffs in Georgia will be an impulse for Republicans to be constructive rather than obstructionist on compromise and moving forward. I hope it will be an impulse on Democrats not to overreach and try to get traditional Democratic priorities that don't have to do with stimulus into the support bill.
When you talk about the possibility of compromise, Larry, it does come back to fiscal stimulus. We didn't get that compromise over the course of the summer. We heard just this week again from Fed Chair Jay Powell that we really need fiscal stimulus. If we end up with a compromise, which is not the $3.3 or $2.2 trillion that Nancy Pelosi, the Speaker of the House, wanted, but something closer to 1 or 1.5, is that enough?
Depends on the details. It depends on how quickly it's going to spend out. It depends on whether it's in forms that will be injected into the bloodstream of the economy. It depends on how good a job we do with respect to COVID. But the one thing that is absolutely certain is that zero is much, much, much too little. And this is a time to be moving forward. But David, if I could say something else, this is a fraught moment for the global economy. And frankly, for the last 4 years, the United States has projected something between indifference and a desire to see other nations fail economically. And there is a huge opportunity for the new president and the new president's Secretary of the Treasury, Jay Powell's already there, to reestablish the habit of global cooperation. And whether the issue is spurring growth everywhere, as I've put it, absorbing saving and resisting secular stagnation, but there are other ways of formulating it. Whether it is not some grand new trade agreement, that's not going to happen, but avoiding new lurches towards protectionism. Whether it is dealing with the debts of the poorest countries, whether it is collaborating effectively so that global corporations pay what they owe in the corporate area and they don't escape to cyberspace by moving income there. On all those issues, there is a huge opportunity to redo and replace our international economic relations in ways that I think could be very, very positive.
Larry, one of the questions that we face right now is where we go forward as a country. And a lot of questions remain, including the runoffs in Georgia that you referred to in the Senate. At the same time, I don't think it's premature to say one thing that the country decided, as divided as it is it didn't want to go too far in the progressive direction. There was some talk of that, as you know, as the Democrats ran for president as the nomination. They rejected that. What does that mean as a practical matter for the policies that President Biden would pursue?
I think it means a wealth tax is off the table. It means Medicare for all is off the table. It means that some of the more aggressively redistributionist approaches that start from a politics of envy, that if we just could tear down the billionaires, that would make things better, whether or not it helped the middle class. I think those kinds of ideas are off the table. But look, David, Florida, in the midst of surprising very much on the high side for Donald Trump, voted for a $15 minimum wage. So there is a very strong constituency for fairness-oriented policies that are within the tradition of American approaches. So let's not overread that vote in any terribly consequential way. I think everybody is going to be to the more progressive side of where they were before. Nobody's saying that our top priority is deficit reduction right now. Everybody recognizes that we need to push this economy forward. I don't hear any major voices saying that what we need is another big round of financial deregulation. I hear a consensus that we need to think about the regulatory future of the tech companies. So yes, no radicalism, but there's a lot to be done that I think fits within a broad progressive tradition.
Larry, finally, it feels like we're on the threshold of a new era. We're not sure exactly what this is going to look like. There's a lot left to be resolved. You've expressed a lot of concern on this program for some time about COVID-19, about the economy, about the lack of fiscal stimulus at opportune times, about some policy failures. Are you more optimistic today than you were a month ago?
I think I am, because I think the country is now back in a safe pair of hands. And that is immensely important for our future. It is immensely important for the world's future. And I think there's a possibility that, it's a trite phrase, but that there will be a sense of a new day in America as we move forward. And people may look back at this last efflorescence of COVID as being a kind of bottom point from which the United States rallies, both in terms of the strength of the economy for its people and in terms of its global role.
That was special Wall Street Week contributor Larry Summers. Coming up, we wrap up the week with the investment outlook in light of the election with Rick Rieder of BlackRock.
When you talk about from the rates perspective, the rates market just breathed a significant sigh of relief that we're not going to see much higher rates. I actually don't find rates that interesting at these levels so anymore.
This is Wall Street Week on Bloomberg.
There was most conspicuously the group of extreme economic pessimists who've gotten such a fearful hearing this election year. But now that the election is over and it is once again legal to talk sense about the American economy, it is becoming increasingly clear that the country is not in the worst shape of the current millennium, but is in fact showing unmistakable signs of grudging recovery from its extended slump.
That was Louis RUKEYSER on Wall Street Week back in 1992, shortly after Bill Clinton was elected president. Now, once again, it's time to assess the economy in the wake of an election. But this time, it's an economy coming off of the steepest decline in modern times, and one that has come to depend on huge injections of fiscal stimulus for its recovery. Rick Rieder, Chief Investment Officer for Fixed Income at BlackRock, thinks that one of the inevitable consequences of the election is that we can't continue to expect that level of help from Congress.
The markets had clearly aligned themselves to, we're going to get a blue wave. And listen, I think the news of the day, I mean, obviously the outcome is going to be significant. It's super important for the economy. The Senate, the Republican carrying in the Senate is a major surprise, and B, major impact for the markets, because whatever the stimulus is, it's going to be significantly scaled down, as you talked about at your opening. Really big deal. And so you talk about from the rates perspective, the rates market just breathed a significant sigh of relief that we're not going to see much higher rates. I actually don't find rates that interesting at these levels so anymore. In fact, I've been letting some go at these levels. It's whereas I like yielding assets because we're going to now have a dynamic where you have a decent economy and presumably if you don't have significant second wave of COVID. And so I actually find some of the risk assets, some of the yielding assets much more attractive than treasuries.
So Rick, as you say, it's partly about stimulus because although people tend to think we're going to get one, it's not going to be, it's have a 2 in front of it, I can put it that way. It's not going to be 2.5 trillion, it's going to be in the 1 range somewhere. Does that make enough of a difference? Or is it also some of the other things the vice president had planned, at least if he got the Senate on his side, some of the infrastructure spending, some of the big spending around the country?
You're definitely right. I mean, that large spending program. Listen, I still think you're going to get a significant stimulus package. I do think that, let's say it is a Biden presidency, that is a more moderate, I would argue, a moderate Democrat in many ways. And I think you will see some compromise. And by the way, the economy, and the Fed's been calling for this, the economy needs more stimulus. You hear all the time people say, gosh, the system can't take on any more debt. It is actually not true today because we talked about on your show, there's a series of dynamics around demographics. There's a series of dynamics around need for income that allows the system to take on a bit more debt. And the system needs stimulus to get employment to a better level.
So where are the opportunities as you look out there as an investor? Where are the opportunities at this moment?
Yeah, I mean, I think if people take, there's always, you've got to invest for the short, you've got to think about the short term, and you try and think about what your entry and your exit point is relative to the short term. Over the intermediate to long term, people have to get returns into their portfolio, have to get yield into their portfolio. So we like the yielding assets. I think emerging markets is an interesting place to play. I think yields, the bid for credit is going to continue. And then I think equities are going higher. Not that you can't, if there's not some civil unrest or some, clearly some pushback, some litigation on the election. But I think equities are going higher. I mean, these earnings yields for equities, the cash flow yields you're getting from equities are really attractive. I mean, you can pull back like you did last week. But I do think if you think about the intermediate term, that's where the opportunity is going to be. I mean, buying the 10-year note at 75 basis points is not going to take your return to the promised land.
Well, in fact, if that reflation trade really comes off, at least to some extent, does that mean the cash you're holding is worth more? That is to say, the dollar seemed to be weakening going into that reflation trade.
Yeah, no, it's a great call. I mean, cash, you think about where treasuries are, cash is not that expensive to hold relative to other assets. And like you say, Listen, I still think inflation, I still think having some tips and break-evens in the portfolio makes some sense. But, repricing it a bit, given where we could have gone, I think makes some sense. But then, like you say, cash is not an expensive asset. But gold, by the way, I would argue crypto is not a bad asset in a balanced portfolio today. And I don't think those trends have gone away.
Rick, it strikes me we've had this wonderful conversation, and it's all been about the election and the aftermath of the election. There is that COVID-19 out there that hasn't gone away, as best I can remember, and it gets a vote in what happens with asset classes, with our lives, in fact. How do you factor in COVID-19 and where it's headed in Europe and in the United States?
So, David, the most incredible thing I think about people who work with me, I've said this way too many times, markets can only do one thing at a time. It's like, just tell me I need to focus on the election, and then I'll focus on COVID. They can only do one thing at a time, which is the most remarkable thing. In the world of big data, the markets can actually only operate in small data circles. But listen, COVID is a big deal. I mean, look at the data in Europe. I know a little bit better in the last 24 hours or so. But you're right. I mean, I think once we get through this, then that is still a daunting dynamic, and particularly in parts of Europe, they're still locked down in some places and potential here. So it is that's not going away. And I think, it's going to take a week or two, and then that's very much going to be at the forefront. And that's why you can't get too overzealous and about, gosh, let's take a lot of risks today, and you got to hold more cash in the portfolio. We're definitely not out of the woods there with regard to COVID, and not out of the woods in terms of we're going to have vaccine tomorrow either.
That was Rick Rieder, BlackRock CIO of Fixed Income and Head of Global Allocation. Finally, one more thought. The other candidate. As the world focused on Donald Trump and Joe Biden as the candidates for president, there was another person in the race, one whose name we all know, Kanye West. Rapper, record producer, and fashion designer was also on the ballot, at least in some states.
I like Kanye very much. No, I have nothing to do with him getting on the ballot. We'll have to see what happens. We'll see if he gets on the ballot, but I'm not involved.
His name was not on the ballot in his home state of Wyoming when he showed up to cast his first ballot ever, but he wrote it in. In the end, it was not to be. For all his name recognition and popularity, Mr. West garnered only 60,000 votes, about 0.3% of all the votes cast. And when it became clear that Mr. West would not be moving into the Oval Office, he graciously conceded. On Twitter, of course, keeping it down to one word, whelp. Well, for those of us not familiar with the term, it's a variant of well and is meant to convey a sense of resignation or disappointment. There may be a fair number of people who feel whelp as this election draws to a close. People who were hoping for another 4 years of Donald Trump in the White House. People who were rooting for a resounding defeat of the Republicans across the board. But we lick our wounds, we move on, and in the end, maybe we can learn something else from Kanye West's run for the presidency. He's suggesting on Twitter that he may just give it another try in 2024. So to follow the lead of Kanye West, there's always tomorrow. That does it for this episode of Wall Street Week. I'm David Westin. This is Bloomberg. See you next week.